Most people feel overwhelmed during tax season because they were never taught how taxes work. From the moment most people earn their first paycheck, they are trained to follow instructions, not understand the system. Fill out this form, sign here. Taxes will be taken out automatically. File your return by this date. That is usually the entire explanation. There is rarely any discussion about why taxes are taken, how those numbers are calculated, or what changes when life changes. No one explains what withholding actually is, how it connects to your final tax return, or why two people doing the same job can have completely different outcomes. Because of that, taxes become emotional. They feel confusing, unpredictable, and stressful. Not because people are careless or irresponsible, but because no one ever explained the structure behind the system they are expected to comply with year after year. When something affects your money and you do not understand it, it feels personal. It feels unfair. It feels like the rules change without warning, even when they do not. The truth is, the tax system is not random. It is not emotional. It does not punish effort or reward luck. It operates on rules, classifications, and timing. When those rules are understood, taxes become predictable. When they are not, taxes feel like a trap. One of the most important things to understand is that the IRS does not treat all income the same. It does not matter if you earn $20,000 or $200,000. What matters first is how the income is earned and how it flows to you. Income type determines tax treatment before income amount even comes into play. That single distinction explains why two people with the same income can have completely different tax outcomes. One might receive a refund while the other owes thousands. One feels prepared at tax time while the other feels blindsided. The difference is usually not intelligence or effort. It is structure, classification, and planning. When income is earned as a W-2 employee, the tax system is designed to be automatic. Your employer acts as the middleman between you and the government. Federal income tax, Social Security tax, and Medicare tax are withheld from each paycheck and sent to the government throughout the year before you ever see the money. In many states, state income tax is also withheld. This system exists to reduce non-payment and spread taxes out over time. It removes the responsibility of remembering to pay. For many people, this system works and keeps them compliant with minimal effort, but it also removes flexibility and visibility. Most employees do not realize that withholding is not the same as what they actually owe. Withholding is simply an estimate based on the information provided on the W-4 form. That form helps your employer guess how much tax to take out, but it does not know your full financial picture. It does not know about side income, investment income, a working spouse, or major life changes unless you update it. If your life changes and your W-4 does not, your withholding can be wrong all year long without you realizing it. Marriage, divorce, children, multiple jobs, a spouse starting or stopping work, changes in income, bonuses, commissions, or even benefit changes can all impact how taxes should be handled. Many people never update anything and assume the system will automatically adjust. It does not. This is why people sometimes owe money even though taxes were withheld from every paycheck. It is also why people receive refunds and assume they did something right. In reality, both situations usually mean the estimates did not line up with reality. A refund is not a reward. It is not free money. It is simply your own money being returned to you because too much was withheld. That money could have been in your paycheck throughout the year, helping with bills, savings, emergencies, or debt. On the other hand, owing money does not automatically mean you failed. It usually means the math did not match your situation. Another major misunderstanding for W-2 employees is expenses. Most work-related expenses do not reduce taxable income under current federal law. Commuting costs, gas, parking, tolls, meals during the workday, uniforms, tools purchased out of pocket, continuing education, and many work-from-home situations are not deductible. These expenses feel necessary because they are necessary to work. But the tax system draws a firm line between being an employee and running a business. Employees trade flexibility for simplicity. Businesses trade simplicity for flexibility. Because of that, a W-2 employee's taxable income is mostly fixed. There are very few levers to pull. The most powerful tools available are accuracy, credits, and intentional planning around benefits. Credits reduce tax liability dollar for dollar. Child-related credits, education credits, dependent care credits, and other income-based credits can dramatically affect a return. But eligibility depends on income thresholds, filing status, dependents, and correct reporting. Many people miss credits because they rely entirely on software or assume they do not qualify without understanding the rules. Retirement contributions, health savings accounts, flexible spending accounts, and employer benefits can also influence taxes, but only when they are chosen intentionally and reviewed regularly. Filing the same way every year without reviewing changes is how people quietly lose money or create problems without realizing it. At NuTax, we help W-2 earners step out of autopilot. We review withholding, filing status, dependents, credits, and income changes so taxes reflect real life, not outdated assumptions. For employees, tax planning is not about loopholes. It is about clarity, accuracy, and avoiding surprises. When income shifts to 1099, responsibility increases immediately. If you are a freelancer, independent contractor, consultant, or gig worker, no taxes are withheld for you. If you earn $1,000, you receive $1,000. Nothing is automatically sent to the government. That feels like more money, but it also means the responsibility shifts entirely to you. With 1099 income, you are responsible for federal income tax and self-employment tax. Self-employment tax exists because when you work for yourself, you are both the employee and the employer. You are paying both sides of Social Security and Medicare, which alone surprises many people. This is where many people get caught off guard. They treat 1099 income as take-home pay. They spend it as it comes in. Nothing is set aside. There is no system, no separation, and no planning. Then tax season arrives, and the bill feels overwhelming and unexpected. The taxes were always owed. They were just never withheld. This is why people say they did not make that much money but still owe thousands. The issue is rarely income. It is planning, timing, and structure. The advantage of 1099 income is flexibility. If an expense is ordinary and necessary for your work, it may reduce your taxable income. This can include mileage, vehicle expenses, phone and internet, tools, software, advertising, education, insurance, professional services, and other costs directly related to earning income. But deductions are not casual. They must be legitimate, documented, and clearly connected to the work. Personal expenses, relabeled as business expenses, create problems. Mixing personal and business spending makes tracking difficult, increases audit risk, and often leads to missed deductions anyway. Documentation matters. If you cannot prove an expense, it may not count. That means receipts, mileage logs, consistent records, and a clear connection to the income you earned. Guessing at the end of the year creates stress and mistakes. Timing also matters. The IRS expects taxes to be paid as income is earned, not just once a year. That is why estimated tax payments exist. Ignoring them can result in penalties even if you pay what you owe later. Paying late is still paying late. At NuTax, we help 1099 earners build systems for tracking income, documenting expenses, separating accounts, setting aside money for taxes, and reviewing numbers throughout the year instead of reacting at the last minute. Structure reduces stress and turns taxes into a predictable process instead of a crisis. Business ownership adds another layer entirely. Once you operate through an entity such as an LLC or corporation, taxes are no longer just about reporting income. They are about structure, compliance, and long-term planning. This is where misinformation spreads the fastest. An LLC does not automatically reduce taxes. An S-corp does not eliminate taxes. Structure only works when it matches the numbers, the role of the owner, and the reality of the business. Business owners must think about how money flows, how expenses are recorded, how owners are paid, and whether payroll applies. For example, with an S-corp, owners who work in the business must take a reasonable salary. That involves payroll filings, tax deposits, quarterly reports, and year-end forms that many people underestimate. When structure is done correctly, it creates predictability, efficiency, and control. When it is done incorrectly, it creates stress, penalties, back filings, and risk that can follow a business for years. At NuTax, we help business owners choose structure based on real numbers, not internet advice. Compliance comes first, strategy comes second. Growth without organization does not create freedom, it creates problems. Business ownership often includes additional responsibilities that people overlook. Depending on the business, there may be sales tax obligations, licensing requirements, payroll compliance, contractor filings, and state-level entity filings. Taxes are often multiple obligations layered together, not just one number. Across all income types, most tax problems come from the same behaviors: mixing personal and business expenses, poor income tracking, ignoring quarterly planning, guessing instead of documenting, treating taxes like a once-a-year event instead of a year-round system. Tax software can file forms, but it cannot plan for you, educate you, or protect you from bad assumptions. Taxes are not something you do once a year. April is when you report what you did all year. If you want tax season to be calm, the work happens consistently throughout the year. How you earn determines how you are taxed. How you structure determines how much flexibility you have. How you plan determines how much you keep. NuTax exists to bring clarity to a system most people were never taught to understand. Whether you are a W-2 employee, a 1099 earner, or a business owner, the goal is the same: compliance, clarity, and keeping more of what you earn the right way. If this explanation helped make taxes clearer, like the video so more people can access accurate information, subscribe for more straightforward education, and leave a comment letting us know whether you are W-2 1099, or a business owner, and what you want explained next. We will see you in the next one.